Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on GP. We love the color green, we like cabs, we like vans, we like buses, we like cars, and we love a good reverse split.
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Hey everybody, welcome to the Laughing Stock. Johnny, how are you?
Yeah, I'm good. I'm all about those reverse split, and today I'm also island boy. I know you in the States, you have the island boys, right?
Oh yeah, it looks nice there.
Yeah, thank you.
Yeah,
So
no,
a good reverse split is we have good. First of all, we have good experience with the reverse splits here on the channel, and we simply love them, right?
yeah, especially if you're short.
Especially if you're short.
Yeah,
So,
I'm usually on the wrong side of those. I've decided not to be around anymore when a reverse split is possibly on the table.
It's the worst word you can hear, I think.
If you're in it, if you're looking to buy something, it's a great time to buy. Usually right afterwards, but yeah, while you're in it.
Yeah, you are in trouble.
Yeah, there's so many names that. And honestly, if you really look at, like, you want to look at some shit charts, it's usually like the ones that, like, at some point there was a reverse split because the shares technically now used to be worth like 10 times what they are. So that's when you see like a stock go from like, you know, $1,000 on the chart to like, you know, $1, because the reverse splits just kill you.
Yeah. So this company GP, they also had like some late filings and stuff. I think they got halted on the Canadian exchange, and it just seems like a mess. And I think it was down 90% for the week. So yeah.
I know I looked at GP. I remember looking back at it when we were doing more deep value, and yeah, it's just one of those names that just it's all speculation, a lot of narrative. I actually didn't even pull the fundamentals up for it because I'm sure it's pretty shit, but still got PBI up in here. Which, by the way, what's PBI been doing? I haven't even looked at that.
I was gonna check.
I haven't looked at the chart. It's actually holding up pretty good.
Yeah, you know,
it actually looks like a really nice cup and handle right now.
Yeah, for sure. And look at the support it found down there on the 50-day moving average.
Yeah, no, actually, that chart actually looks pretty nice.
Yeah.
Let me actually throw it over here so you guys can see what I'm saying. What am I zoomed in at here? Let's go 125 so people can see. But yeah, this is what Johnny was saying. This purple line here for me is my 50-day support. So it bounced off that, and right now volume looks low. It looks like it's setting up actually.
What happened that day though with the volume there?
No idea, but someone took an
Because
interest
that
there because this
that was
definitely is a
after
huge amount of
earnings.
supply being bought up.
Yeah,
I actually,
maybe Justin added to its position.
well, yeah, I don't know, but this actually is super bullish because I guarantee you this giant buy here was when this broke that 50-day. Someone had a buy right there.
Yeah, and it bounced perfectly back up and found support there. And then, you know, right now, all the moving averages are in perfect line again. And it's also setting up with a pattern, like you said,
Yeah,
a little bit of a cup and handle there. I will say, though, in my sheet, the ADR is only 3.4% here, but that doesn't matter so much if you get a big move in, you know, it's going to increase the ADR as well.
yeah, and I'm not saying that this is going to go up, 50% or something. I'm just saying in terms of setup, like, could this be a 10% play? Something like that. And actually, we were just talking about this right before this stream started. I've been doing a lot of video watching. I know we had a week off, guys, so there's been quite a bit that's gone on in the past week or two, especially in terms of style and what I've been working on. And Johnny and I have been working on improving scaling in and out of positions essentially. So one of my point being is that like Minervini and a lot of the other guys, Pradeep, all these guys, they talk about understanding each trade and not necessarily predicting when you go in like what's going to happen, but as the trade starts to evolve, being able to appreciate where you think the stock's going. So for instance, if this takes off on a day, and shows like really strong volume come plowing in at the same time that goes in, that's super bullish, and the chance of that going up for a few days is really high. But if you get one strong day just because it's breakout day and everybody's looking for that pattern, everyone sees this, but then the very next day it's kind of weak or something like that, or it just doesn't seem like the interest stays there, that starts to throw like red flags to me now. He says, I can't remember what the word he uses is, but it's like, I don't know. It's just like bad signals, essentially. Like, you're trying to look for things that look like they're going to have that continued strength. And I mean, like I said, right now, this looks like a good setup. It looks like it had great support here. There's a huge buy on this day. Volume is really drawn right down here, especially as we've moved up into this first part of the handle here. If this bounces right here and takes another day up, we'll keep this right on my radar because it actually looks really good. Yeah. But I kind of want it to move sideways a little bit longer.
Yeah.
Just longer the base, the bigger the play usually. That's a pretty good generalization for things like this. And really that is because that supply just keeps drying up as time goes on. And then if everybody pours in at the same moment, there's not enough people there to sell, and the people who are holding it are going to continue.
And of course, this is a familiar ticker for us, and we know that there's also a story here with in the past year, there's been some changes in the board, and some GameStop people that were involved there are also in this stock now. So we have followed this story for a while, and I know you pulled up the fundamentals the other day on the stream, right? I think you did.
Yeah,
so,
no, I got them right here.
Yeah,
that's actually
we have checked.
I didn't mean to quite pull it up, but and like don't get me wrong, it looks rough in the last like year or so here. But if you look at like cash flow per share, I mean it's still positive. So yeah. Sure, these numbers are red, but just remember too, this is based on previous like years and stuff. So where it did really well in like 2015 and 16 here, these ones just compared to that are lower right now. But as you can look, I mean, you can quickly look at the chart and just see that overall the narrative is improving here. Because, don't get me wrong, about a year ago, this was at $6 and it's doubled from there. So in 1 year, you have 100% return here if you were able to kind of hold through. And, there's all kinds of things when I'm looking at charts now that, before I didn't pay attention to like the fine details of things. And now I'm learning that like you gotta really like look at everything here. Like for instance, the one time it got down to the 200-day moving average, popped right off. Like no one let it get below that. And I know that sounds so trivial, but in terms of the people who are using this in terms of trading style, in terms of technicals, You know, maybe bigger institutions that are looking at buy points. That's what they're using, is things like that. So if it hits that 200-day moving average, and you know, it won't go below it, that means there's someone there that's supporting it there. They won't let it go below that number. They want it to keep going up, and they're happy to buy there. I'm not saying
And
it's the right
also,
time to buy, but you know.
look at all the times also it bounces off the 50-day. You get that pullback up, which you have gotten this time as well. It's actually a bit too late if you wanted to try a setup on the 50-day. But now we start to see a new shape, and like you said, maybe a little bit move sideways from here, and then if it breaks up, pay attention to it. Just have it on your watch list.
Yeah, and one thing I'll say that, you know, I haven't really done that Minervini does, and I definitely need to work on this because it's super important in order and able to increase the amount of returns that you're getting. Is so I'm typically looking for it to break out from this point here, you know, or at least here, let's get my line skills going.
Yeah, nice. Been a while.
Yeah. You know, so like this is kind of like the level, and sure, you could say right up here too is like a real high peak to break out of. So if it breaks out of one of those two ranges, that's good news. But really, the interesting spot is down here.
Exactly.
When it's in this sideways range here for a while and it breaks right here, this is where Minervini likes to buy. It's not up here, it's down here. And the reason why is because if you're going to get stopped out of this thing, who cares if you get stopped out here or here? It doesn't matter because you're stopped out and you lost the same amount. But if you get in here, now you wrote up this, and yeah, you got to hold it for a few days longer. But if this now punches higher and actually does break out, you can capture that next part of the move on top of the fact that you got in at this little bit of a base down here. So don't get me wrong, you can use this as the more recent base and get in here. But in the long run, if you look at it, you know, getting in on this kind of base down here is important too. If you can. Now, I know you have to do a lot of research to be able to find these kind of things and to stay on top of all these names. So it's not like it's just something that you're going to be able to do. And once again, if I was doing this full time, these are all the kind of little things I'd be trying to catch and find these breakouts down in this base instead of always up at the top. You know, usually I'm screening with 52-week highs and things like that just because it narrows down my looks. And don't get me wrong, if it breaks out from the 52-week high, that's way more bullish than down here. But it doesn't mean that it's going to run for forever. And I mean, if you look at this historically, you know, we had the same pattern down here where it was in this base. Like you said, this one was running the 100-day moving average on this. It broke out right here from the base and then straight up. And this was, I mean, you got in at 750 and, you know, we talked 3, 4, 5 days, whatever you want to hold, whatever your pattern is. Or if you're using the qual approach where Q says you don't get out below the 10, he wouldn't have gotten out till technically on this day here. Yeah. So, I mean, that's a much bigger move. Now it's a much longer holding period. And to be honest, if you're going to hold through here and you somehow survive this day, this didn't convince you to get out, and you made it through some of this run here, I would argue that somewhere in there has got to be the strength that you sell on. And those are really the only two ways I find to sell out of things is either you have a set amount, you put a stop loss on, or just after a few days of strength, you get out.
The run-up was also on earnings, so you would have to hold through earnings there. But if you are up already, you just you can trim the position and just you know, hope that you get a bit lucky.
Yeah, and that's all, you know, possibilities. It's just make sure you have an idea of that before you go into these kind of things, because like really have solid sell rules. It just makes it so much easier. Lately, what I've been doing is just setting a stop loss at some kind of. I've actually been using trailing percents this week, which I actually kind of like. We've, like I said, we've been talking about adjusting to scaling into positions, and the whole idea is that your bigger winners are larger positions, and the smaller ones that haven't started to balloon up yet, if you get stopped out on them, they're super small losses. So who really cares? But with that like vein being in there, every time you can avoid a stop loss, your percentages increase. And you know, I had I shouldn't complain because I'm up for the week and I've been up now for 2 weeks in a row, but just not by much. That's the only, you know, like where I'm like, meh. Where's my portfolio? Here we go. I'm only in 2 names right now just because I sold out of a few. at the end here. Just CPS and Galliano, which is more in metals and mining and that kind of thing. But you know, even last week, like what was it? I'm only up 0.5%, so it's not like I have like a crazy great week or anything like that. But with the new strategy, the idea is like go in at like 5 or 10% on a position. After the stock's up so much, add on to the position, which is something that is really counterintuitive as an investor or trader, is going more heavily into your names. And essentially what you're doing is you just adjust the stop loss on the overall position. There's a ton of ways to do it. But the idea is then, you know, let's say on any given week you go into 10 different names. Let's say 5 or 6 of them get stopped out. Like that is what it is. But the 3 or 4 that you're still in at the end of the week that are doing well, you now have doubled your positions in those, and maybe even like if you went 5 and 5 and then 10%, now you have a really good size position in a name that's running and working well for you. And then, you know, every once in a while you're going to get lucky because you see names that Johnny and I own that go up 40, 50%. Well, that 40 or 50%, if I got 20% of my portfolio in it, is going to be a big winner for me.
Yeah.
And if you look at all like the really successful traders, the guys who win the championship, now those guys are nuts. They're using like leverage and everything to try and like really like nail it, which is not recommended by any way. That is not financial advice. Do not do that. The only financial I'll give is probably don't take leverage on. That's probably pretty solid financial advice.
Yeah.
But to each their own. Whatever you know, talk to a fiduciary. But since I'm not taking leverage on, the one thing I can do though is increase position size in names that are working. So that's one thing I've been doing. And the frustrating part of it is, as always, you're trying to figure out how to let these things run for as long as you can. But at the same time too, you don't want it to pull back too much that it erases or you get a loss on it, especially. So this week, for instance, at one point I was up over 3%. And some of the better names I had just happened to pull back. And don't get me wrong, they pulled back right to where my stop loss was set, but then they end up being almost break even. And if you think about it, if you're going to go into a name at, let's say, you know, 10% and then another 10% when it's up 10%, for instance, or up 5%, and then you're adjusting your stop loss, however you want to do it. If that does pull back, you can go where you look really good for, you know, almost the entire week, and then on that last day when it pulls back and hits the stop loss, it's basically a minimal gain, which I'm happy with minimal gains. Don't get me wrong, I mean, it's not a loss, and everything's an opportunity to slowly work your way up. But the only thing I can think in my mind is like on days where it's really strong and I'm up, I think I'm going to start selling into strength, because there's multiple instances now where I've seen that I'm up, you know, a good amount, and you know, you're just, but then, and that's the trick, because then the other thing you know, as soon as I say that, I think, but then you're going to miss out on the big winners. So
Yeah.
I think it's more odds. Like I got to think about like how often am I going to hit a 50% winner? What's the return on a 50% winner? Sorry?
Yeah, for sure. This is the art of this, I think, but you can also have some variation, though, and but if you start to have some variation on it, I can bet you that the one you sell will move up, and the one you don't sell will
yeah, no, of course,
will go down. Yeah. But this is definitely a tricky part. But like you said, like all these people that we have seen interviews on Trader Lion, and me and Arvini talk about them, and in the books we have read and all that, they add to the position. They it's all about the managing of each position, right?
Mm-hmm.
And to your point with how it's tricky to, after you add and maybe get yourself to a 20% position and raise the stop loss, like how tight are you going to have it so you don't end up losing on already what was already a winning position? Because one point Minarvini is also big on is like saying never let the winning position turn into a loss.
Right.
So yeah, that is, it is difficult. I know that happened to you this week, that you got yourself into a couple of names and they turned on you, and yeah, we just have to move on and see how and test things, I think.
Yeah, and I don't think I didn't. I'm trying to think if they. I don't think anything turned into like a loss per se,
No.
or you know, most of them. How I've been doing it is I'm basically always adjusting my stop loss to where we'll be break even at most, you
Yeah.
know, or at
Yeah.
least I should say. Hopefully not at most. And it's been fine. Like, it's working. Don't get me wrong. I mean, it's slowly trickling up, and you know, it's making me also be very critical of the setup, and I'm not going into as many names. I know before I talked about a shotgun approach, and it's kind of funny how in 2 weeks, you know, I go from a shotgun approach to immediately thinking like I should really be focusing heavily on the setups, and even though you can still do a shotgun approach, but they really should be on credible setups instead of just kind of going into like a bunch of names willy-nilly. But at the same time, like Infu, this is one that I got in this week. I got in on the 25th, is that right? Yeah. On this day here, started to break out. And you know, on the 27th, you know, I doubled my position size, and I think I only doubled. I don't think I ever got to do another position. So what I did is I took a 5% position when it was up 5%, took another 5%, and then on Friday I decided to sell. And reason being is, you know, I'm just watching the volume down here. You don't, you know, it sucks I missed this giant run up. This would have been the run up to get. But
Yeah.
you know, very, very tight consolidation here, low volume, and then I saw the buy day here, so you know, it triggered a buy, and then I'm watching it, and then on Friday, just lower volume, and you know, it looked like it was kind of reaching the peak of where it was going to work. Now, who knows? This could keep going up from here. I don't know, but my point being is, I took the win. It's been up for 5 days in a row, so kind of the way I played this one. Now,
Yeah.
not a huge return by any means, but you know, turned into a 10% position. And essentially I capped my risk at like 1/3% for the entire run, like at no point. And really, I guess that's a point that you and I haven't emphasized probably enough about this. The whole reason that you do this is to cap your risk. Because when you start with a small position, you can take on a bigger stop loss. And then when you double position size or triple it or whatever you want to do, you adjust your stop loss so that risk is essentially the same, except now you have a bigger position in that name.
Yeah.
It's a little more complicated to do, and you got to kind of watch it, but at the same time too, it kind of makes you focus on fewer names, and also excitingly, it makes you focus really only on the names that are doing well. Like the ones that don't do well, you either get stopped out, or after a few days of it not really doing much, you know, it just kind of fizzles out. And
Yeah. That happened to me this week. I sold one that didn't really move, you know, and
Yeah.
I was at one point I was fully invested this week actually, and I just had to free some cash up because I saw better setups,
Mhm.
and I sold one for a tiny profit, but it didn't move. So yeah.
And you know, and all it takes is like one name on this to do extremely well.
Yeah.
You know, we had talked about it. For instance, if you were using this strategy and you scaled into a 20% position, if that 20% position becomes one of the names that's up 50%, you have 20% of your portfolio in a name that went up 50%. That's going to be a huge return. So every time you catch one of those, it makes a huge difference for your year. And
If you look at the
sorry.
No, if you look at the interview with Sean Ryan, David Ryan's son on Trader Lion, I think he said he had 50% position in one of the big winners for the year, and he ended up winning the championship with 150% return for the year or something like that.
Right, and that one name is a big part of that. You know what I mean? Like a
Yeah.
50% name that you're up 100% on, that's a huge return to the portfolio. So, you know, that's literally a year's return for most people in one name on probably a week or two play. I don't know, maybe he held it for a month, who knows? But my point being is, this is how you really outperform. Because, you know, that's part of the thing too. Right now, what was I at for overall for the year? Like almost 24%, you know. So last year, for the few months that I was tracking it, I was also up about 25. This year, I'm also there, and it's almost been exactly a year.
Yeah.
Since I started doing this, because I think it was either September or October. October, I remember,
Yeah.
is when I got real serious about it because my son was born. So I just remember the time period, and he's
Yeah.
almost a year. He's 10 months now. So
Yeah.
I mean, when I'm looking at it from the point I started, it's been it'll be a 50% return from then. So I should be happy in that aspect that that's the goal, is 50%. Now it's not year to date. Year to date, I'm up 25%. So, you know, I guess if I start measuring it from the start of the year, I still have another 25% to go, and I only got about 4 months to do it here. So, something's got to work. But my point being as well is, you know, and the highest I've been up this year so far is around 30-ish%.
Yeah.
So don't get me wrong, you know, 30% a year, if I can keep that up, it's not that you wouldn't, you know, kill it doing that. 30% a year is crazy numbers after a few years of doing that.
Yeah.
But the goal is to get even higher than that, you know. The more and more I do it, and the more I realize the things I want to pay attention to and be able to pay attention to during the day, it's just more and more that I really want to do this full time and push for that. Because, you know, once again, I'm doing this on my phone, like
Yeah.
in between all my other things I'm doing. It's kind of nutty, but you know, I found a way to make it work. So it is what it is.
Yeah. And that's how it is for
Yeah,
most
it's
people.
is how it is. You know, that's and you know.
And by the way, I remember Kulamagi saying on one stream he could not imagine having kids and family when doing this. He didn't have that.
Yeah.
So it doesn't get easier when you add that to the mix, you know.
No, and it does not. You know, if I would have learned all this stuff when I was 18 and you know, been still single without other, you know, responsibilities and stuff, I tell myself in my head that would have been great, but then I'm like, you probably would have threw all your money away. You would have lost everything when you were young because you were too young and stupid to catch on to this. But I've always been financially frugal or conservative, really, more so. So I think it would have been okay. I don't think I would have like burned through everything I had, but it could have been dangerous.
But you know, it takes a while to get to where we are. Not that we have I'm not talking about us necessarily, but you have to go through some experiences to get to the point that you are and to learn. And for you and I, we have definitely, you know, cut ourselves on some valuable lessons that I think we will not repeat again. And if you were young then and would invest maybe in some NFTs or something stupid like that, maybe you had to do that to get to a better point.
Guaranteed, NFTs are going up on Tuesday.
Yeah.
But yeah, and you know, like I said, it's just another part of the process.
Yeah.
It's funny too because I was telling Johnny that I reread How to Think and whatever by Minervini. What's his championship book? How to Think and Win Like a
Think and Trade Like a Champion.
Yeah, How to Trade Like a Champion, whatever it is. And in there, you know, he talks about scaling in, and he talks about exactly his setups and stuff like that. And it's funny, I read that book. It couldn't have been that long ago. Maybe a year, half a year. I don't know what it was. And like once again, you know, you pick up one of those books after it's been some time, and you just like pick out little details that you probably missed the first time, and you start to realize the importance of the emphasis on certain things. And you know, each time I just think it makes you that little better. You know, I'm starting to have like a bigger picture in my mind of all the things that are starting to matter more. When I see my chances are going to be highest to trade well. And you know, I'm definitely to the conclusion now that like it's funny. I still think about RK and his timing in terms of when the markets crashed during COVID. He kind of went nuts in terms of his deep value style and kind of peppering, you know, names across there. and I think kind of the same thing. In terms of me, it's funny. I listened to Value After Hours. It's a podcast with Tobias Carlisle, I think his name is. And I can't remember his other name. Sorry guys, I love you guys. You guys are great. I wish I could remember your names exactly. I literally listen to it every week, and they're always talking about how value has underperformed. And don't get me wrong, these guys are holding funds, so it's not like they can just play around with the money and stuff like that. And they're big value guys, and during this time period, they're always joking about how, it hasn't performed and they're just in like a tough part of the market. And I almost feel like I have that, in my mindset, like during this time period, if stuff's running up and momentum's what's working, I'm going to be using momentum. I don't see there a problem with doing that. And then if the markets were to crash and we were going in some kind of COVID issue or something like that, who knows what it would be that would cause it. But then I would go immediately probably right back to deep value. And I would probably take RK's approach with a little bit of Burry in there, and take a bunch of 1% positions in all kinds of companies that look like they ain't gonna make it and are super cheap, and just have a stop loss on them, and then from there just let them run and see what happens. See if I can get through some of those names and make it out.
You said, right, if you don't deal in companies that goes bankrupt in those times, you're not taking enough risk.
Yeah, and it's a different style of risk, but once again, your risk is always determined by where you get out. So, I can take and risk comes in many ways, obviously. Depending, and the diversity there is because of the fact I'd be taking highly speculative companies at a really rough time in the markets. And don't get me wrong, COVID happened to bounce right back. That was just like a perfect way to play that. That does not mean in the next drop it would do that. And there'd be a lot of decisions going into when I actually thought the markets were going to come back. I would not catch it at the very bottom. I promise you that. There would be some signals telling me that we're coming back up. But with that being said, it just becomes like an evolution. And I think all those little things and all those details and thoughts and ways that you're going to improve are going to allow you to outperform. It's going to make you different than the next guy. I know there's the argument to keep it simple, but at the same time too, keep it as simple as you can, but it's not that easy. If it was that easy, everyone would outperform. So you have to be doing extra amounts to be able to kind of push above. And you and I have talked so much about like my goal is 50 to 100%. But in my mind, I'm thinking now, if 50 to 100% is my goal, I should be shooting for 250 to 350, like Minervini and those guys do, because if I don't hit that, that's okay. If I don't hit 50 to 100, well, it's okay, and I'm hitting 30, it's not good enough.
Yeah.
And until you get into like the millions of dollars, at that point, the trading will change, the investing will change, because it's just more cash, and you're not as agile as you are at our point, or at least my point. I don't want to speak for Johnny because.
No, we are about the same, I think.
I assume we are.
Yeah.
But at the same time too, it's like all those little things add up, and I just want to keep focusing on those things because I have noticed that I'm seeing things, every month, every week. We've talked about it. Just little things that like stand out to me. I've been doing a ton of back testing lately. Every day, I'm spending almost an hour just going over stuff that's worked, things that haven't worked. Why did this look like it worked? What was the signs of things? What was the news on these kind of things? All those different parts. And then in terms of my actual performance, what are you selling on? What is it pulling back? How much could you have gotten on these plays? And you can't play them perfect. It's impossible. It shouldn't even be your goal because it won't work. But anywhere you can improve upon that makes a big difference.
I think you're on to the essence of making this work, because when you said it was, you should try to make things as simple as you can. That's what Kulamagi says all the time, and I know he said it. It's we're looking forward to the next Market Wizard book where he is in it. I'm sure he repeats it there because he says this is simple, but it's not easy, right?
Yeah.
And what's make it simple is it looks very, you know, if you buy over this line, it should be good. If you buy below it, stay away from it. Stuff like that, you know. But to pick those big winners and to pick the right ones, you can't get away from the fact that you have to look at a lot of charts and read a lot of books. And that's kind of what you were saying now, right? What caused this move? What caused the drop? You know, which group is the stock in? How does the leaders move? You need to be on top of all of that stuff. And I told you on one of the previous streams, I'm currently, it takes time, but I'm going through like, I think it's 6,000 tickers, and I'm looking at the historical performance, and I'm adding. I have some filters, and I'm adding them in the ones that pass the filters. I'm adding them to a new list. So far, I have 1,000 of them, and the plan is just to go through and historically in fine time periods in bullish markets and look for the patterns and what caused the moves, you know. So in the next one, I have in my mind a database I can compare things to that I maybe see, and hopefully it can make me pick a little bit better stocks, you know.
Yeah. And, you know, in terms of you saying, like, you know, you're going through thousands of charts in that, and obviously that's what you have to do, especially if you're going to try and read technicals, is you just have to go through it. And it's really important to listen to like the experts who already know, because it can really skip a lot of the legwork for you. On Traderline, I think he just had, I think it's Stan Weinstein. Is that his name?
Yeah.
Yeah. And, you know, he was just going over some charts and just pointing out little things that he sees that, like, you know, he's like, this is why this is a good chart. You know, this is why this is, you know, not a good chart. And, like, there's a lot of generalizations about charts. And if you're able to just see some of those overall generalizations, it's not like that's going to drastically improve your percentage of picking out good setups. But if it puts it up like even a quarter percent over a lifetime of investing or trading makes a huge difference. And I keep thinking that, like, all those little things that I'm doing, you know, like where, you know, if there's a name I didn't take and it was the right move, that compounding effect over time will become, you know, heavily in my favor, essentially. So you know, even if I look at a ticker and I see, let's say there's, on any given day I'm looking and there's like 5 or 6 setups that look pretty good to me, and I pick, let's say, 2 of those setups and the other 4 I don't take, you know, I'm looking at those 6 after the next 3 to 5 days, you know, over the course of a week, what happened since that point. On the ones that did work, you know, what was all the signs? What was, you know, find as many things as you can about those that made it look like it was going to work. And, you know, find the other ones that, you know, what looked wrong. What was, you know, is there anything you can pull from it? And then on top of it too, like names that really take off. You know, was there any signs for those ones, you know, that maybe I had missed. And then on top of it too, I feel like the real art of what I'm trying to do is I'm trying to take into the idea, like, I know Minervini says he never looks at intraday, but I find it helpful. You know, I kind of like to see what the markets are doing on an intraday basis. You know, where they're at in the day, you know, has the you know, because if the Nasdaq's down, let's say like on Friday it was down like, I think like 1% or 1.5% or something like that, or either way, you know, on that day, as I see breakouts occurring, I'm seeing, are any of these holding? And for instance, like GROY was one I saw in the morning. I know you have a position in GROY, and that's GROY, and it looked good right off the rip, and it held all day. And as the Nasdaq just slides, it just didn't fail in terms of like its breakout spot. Now I'm not saying it was a breakout on Friday. I'm just saying it continued to run essentially, and that's the kind of thing that. You know, if you were going to get into a name, that would be a good thing on that one day where the markets are down. If you're going to invest on those days, because like Qualamaji says, you know, he's going to invest on any day. It doesn't matter. Now, it's all based on the setup for him. But if you're going to invest on those days, you better be in the right names, because most of them are going to fail. And, you know,
Yeah.
I didn't take anything on that day, which and more just because I didn't think GROY was at the start. I think it's more towards the end of its run. Not that I don't hope it keeps going up for it. I hope it keeps going. But not a good time to get in. You know, it's good if you're holding it, but not a great time to get in my mind. I'll say that it's going to go up 100% for you on Tuesday.
But I took it. I just to be clear on that, I took it earlier in the week.
Right, that's what I'm saying.
Friday. Yeah.
So you know, and I know the day you took it, I was watching it on that day, and I thought it looked good. I just didn't take it. And it was one of the only names that was on my radar. And trust me, especially when you took it, I was like really going back and forth. I was like, it does look good. I'm like, I kind of like it. But
but the next day was down a bit, and then got a really tight candle, and then you had the Friday, which is when things are up in the market, it's generally down. You can talk about relative strength, but this is also in the sector of in the gold, it's a minor, so those tends to move a little bit against the market, so maybe you have to play them a little bit different than to look at it as a very relative strength move, because it happens a lot with these type of stocks, but still it was up 10%,
right.
So
this
it was a lot.
Kind of the area we're talking about. This was the day here that you'd want to get in. Which
exactly.
was that, Tuesday?
Yeah, I think that was Tuesday.
Yeah. And don't get me wrong, it had just pulled back. It had been rising up. The volume had contracted quite a bit here. And then yeah, it's kind of pushed up, and it definitely showed some kind of weakness right here. But at the same time too, it didn't really pull back too much, and the volume in terms of selling off was drying up. So what you're seeing is all of a sudden the sellers are starting to go lower and lower, and then the buying, there's just too much pressure. And once again, you have a day where it actually gets to break out. And sure, you could argue to get in here, but I just, getting in on this day, this is already such a run up right here, because now you're dealing with this whole section there. That to me is too long being able to get in. I'm not saying it can't go higher. I mean, you can look at some of these names. I mean, you can look at some of the run it had. I mean, if you want to argue this is like a long run. Well, let me just pull that back, because it's really like into here. But it can do it. It can run for a long time. But how long do you want to hold some of these names too? Because that's the thing, is most of the time I find it's rare that you see this actually occur. Now this is how you get the big gains, because once again, this is one that, let's say you had gotten in, like, I don't know, somewhere in here, that's like 160, and you would be able to hold till 240. I mean, this is a big return, especially if you make it a 20% position. And that's kind of what we've been talking about. And you can play around with it a million different ways. I'm not locked into any one way of tiering into things. Johnny and I have talked about, you could go at 5% and then 5 and then 10. That's one thing you could do. You could go at 7 and 7. You could go at 10 and 10. If you really wanted to be nutty, which I know this is what Minervini and some of those guys do, because they talk about having big positions, do like 15 and 15. It's just how many positions do you want to have going into the account, and how comfortable are you holding big percentages of your portfolio overnight? Because that's the other thing too. No matter what, if you have a 20% position in something and you have to hold it overnight, there's risk involved with that, which I assume, looking back, a lot of these guys are like, I won't hold through earnings. And reason being is, I understand if you had a 20% position in something and you're up, or you're even close to break even, that's really dangerous to hold that through earnings, when something could drop, 15, 20% on you, and you can't get out of your position until the next morning.
Yeah. At the same time, though, I'm a little bit annoyed with that, because they keep using examples where you kind of have to hold through earnings for the example to be valid, So like I said earlier, I know sometimes when you have a cushion, you just trim the position, and if you read up on what you think the earnings will be and stuff like that, I guess you hold a little bit through it, I think that's what they do often. I think Minervini has been open about that as well.
Yeah, and don't get me wrong, it's just, if you're going to hold through earnings, you better be really confident in what's going on in that company. Like, you better know your stuff, you better be bullish, you better Like I would argue you better have a value approach where you know the business, you know the fundamentals, you
Yeah,
know what's
the
expected.
story.
Yes, you
Yeah,
know the narrative. All those things become really, really important. Um, and you know, no matter what, when you're waging something like this and the risk becomes higher in that time period, that's where it becomes really important. You know, RK was also a huge point on this. You know, when he said he was buying options or something like that, you better be really sure that at that point those options are going to be in the money and worth what you want, because otherwise it's a complete loss. You know, you know, options are the highest of all risk, because sure, they can return a hell of a lot, and RK proved that. But if he was wrong on GameStop, you know, that would have been a huge loss. And don't get me wrong, I think it was, you know, I've calculated this a bunch of times, and unless he was lying about his numbers on between the different sites, which you know, on his stream he would say it was worth 5% of his portfolio. And but then, you know, on the other thing too, it was just really that one account that we actually were able to see these numbers. So
because he said he had other accounts.
right. So it could have, you know, I don't know. Maybe that was just one account. He threw all that in on top of the fact he had 5% of his RK portfolio. And so I don't know. But if you did the math, it proved that he had like 800K.
Yeah,
I don't know if that was true, but if he had been doing this for 10 years and had gotten up to 800K, I don't really think that's that crazy. That makes sense to me. So to take a 50,000 position, but no matter what, throwing $50,000 into options is pretty ballsy. Even if it is only 5% of your portfolio, even if you're wrong, it's you know, it's still a gut punch to get knocked out $50,000. So, you know, it, like I said, it all comes back to it. And, you know, every trader now that I ever hear, everybody I talk to, every investor, you know, it's all about risk.
yeah.
As always, it comes back to that. And that's whether you're value trading, you know, position trading, even if you're in growth, I would imagine you have some kind of way of leveling risk.
The best thing I see now is on different forums, and they ask the question. They are beginners, and they ask the question: should I deal in options? it's it's like no, maybe not.
You know, I will. Yeah, you know, me versus. Yeah, funny enough, they're very. This is so terrible, but like the very first time I made real money in the stock market was options.
What's an option?
And that was only because my one friend was like, "Oh yeah, the options." He's like, "They can go really up." And like literally the first option I bought, I made like 5K on, and I was like, "Oh, this is like, what am I doing? Why am I not doing this? Like, this is awesome."
No, but that's what I mean. Like you see so many examples of that from beginners, and they think they are the best in the world. Like this is easy.
Yeah, and I happened to buy, it was Tesla of all things, and I happened to buy it on one of its biggest up days like they had ever had. I just bought an option in the morning, and all day it went up like a ridiculous amount, and just sheer luck, you know. And this was when it was like, you know, Tesla was like that golden stock where it just, you know, could do no wrong at the time. Totally lucky, but either way, and totally stupid. You know, I had no idea what I'm doing. Easily could have lost whatever. I think the option initially was like 1,000 or so. I don't remember what it was. But you know, to see that kind of return in a day, I'm like, oh my god, like what am I doing? I should be doing this all day.
Yeah.
But yeah, not that easy, and I do not recommend that by any means. That is not financial advice. It's extremely stupid.
I think there's a reason that wasn't it called loss porn on Reddit?
Yes, yeah. That's honestly, I think that's where when I found Wall Street Bets too was. You know, that's
there's a reason that the channel exists.
Yeah, that's when I went down the rabbit hole.
Speaking of loss porn, have you checked the NEG, the chart now?
No, I haven't looked at it in a sec.
We can talk about it.
I'm gonna put a buy order in on 27.42.
Yeah,
bounce right off that 100.
Completely taken a nosedive downwards, but I think it was up from the setup that we talked about. It's up 300% to the top. So
no matter what, this is a really impressive run. This is insane.
For sure.
What are we talking? May this was worth $3.
Yeah.
Imagine you're the psycho down here who's like, I'm gonna go all in on neg down here at 3.
Yeah. But I think actually we said this right on Friday, 25 of July. I think that is a potential spot you could have taken that one.
There's a bunch of spots in here I see. You can take in here.
So
I would argue this is
those
a
are
good day
probably
here.
the ones. And if you follow Kulamagi's stop selling rules, you sell on 25th of August, right? Probably you should have sold a bit earlier when you see that big drop on 22nd of August.
Yeah, I mean, that's why I say selling a strength, because you could, if you you know, on this day where it really peaked up here like at a 130. I don't even know what the market cap must have been. Probably if it's at 40 now, like 2-some billion. That would have been a good time to.
I think it was close to 2 billion.
I mean, you know, but that's the thing too, is like even here at 50, you know, on this run up right there, you know, if you're not selling on this day, you have balls of steel.
I have to say though, according to TradingView, there was earnings on 21st of August, which seems to have caused the drop. So you would probably sell before the earnings.
True. So if you had, you know, you had a bunch of people coming in here just before earnings to take the risk here.
It would be an amazing trade.
But yeah, but it's whatever now. But yeah, I mean, if you look at the volume dry up here, I mean, some of these setups now I'm looking at, like we talk about VCPs, and I know that's what Minavini calls it. But you know, you have this huge run up, you have this big pullback, you have it starting to move sideways. You get some tight candles here. Look at this volume dry up.
Yeah,
and then
non-existent.
Normally, you know, I'm looking up here because I want it to be a fresh breakout. You know, I guess I'd probably this one would be too choppy to me to take it up here. I'd probably take it on this candle here on this day. But now that I'm looking at this, like, once again, if you had taken it on the setup right, you know, in this region, let me just bring this down because it's more in, like, I'm just saying this to me looks like the box that we're talking about. So if you had taken it on this day, I mean, this is a great day to take it. Now you gotta be careful with your stop loss, because you know if you're scaling into these things and you're putting your stop loss. This came all the way back down to here, so almost to the previous day's low, which you know, Qualamagi and all those guys too. That's another huge trick, is if you're gonna swing trade as opposed to day trading, you got to be able to set something on the longer term chart that you're okay with it pulling back to, but holding it, because this is a pretty choppy chart, and you know, when something's moving this much, it's super hard in your mind mentally to watch something like this go up $20 and then come back down $20 and not get out. So
right now this has an ADR of 44%.
Yeah,
so you're gonna have
that's an insane number, and you have to somehow set something that like you are truly going to stick to in this, because if you don't, there's no way you're gonna hold. Like, you will guaranteed sell. You will not have the nerve to stay in something like this. Now with that being said, no matter what, it's tough. But yeah, just really figure out something that works for you. And this is the thing. Do you want to catch these home runs like this, where you're catching a name like this every once in a while? So you're going to get stopped out and stuff all the time, or you're going to lose your gains all the time. Stuff's going to pull back. But if you do hit one like this and you get that 50% return or something like that, you know, it's just whatever you think your odds are. You know, I keep going back and forth, because every once in a while you get that huge return, like a USAG where you and I made, you know, 100% in a day. But then a lot of times you don't, you know, you get these, like a play like neg, like, you know, once a month, something like that. And that's assuming you're even in it.
But if you took this on, like I said, on the 25th day, where you were also talking about, you are quickly up that 10% to add to your position. So on day 2, you would have a full position into this, you know.
Right, but at the same time too, like I said, if this pulls back too much on you, even though you had 20% into it, did you hold
Yeah.
it?
Yeah, well, if you use the Kulamagi rules, which I'm currently doing at least, but it's easy to sit and say when
That's what
you
I'm
got
saying is like
experience.
I get it. I'm not saying that, but you know, I will say the volume holds up here, and even though there's the down day here, you get the following day with really strong, and then don't get me wrong, it does
Yeah.
dry up, but it stays above the 10-day moving average. Blah blah blah.
Yeah.
So you know,
I think you just have to experience one of those, and the more you know, because this is pretty this is a big move in a short time. So
right, and I just want to bring up two charts that these are two names I've been in recently that are all over the place. So CGTX,
Yeah.
I don't know if I talked or no, I didn't talk about this because this was the previous week where we weren't able to stream, but I got in on I believe the 20th on this day. I saw it on this day on August 19th. I looked at it at nighttime and I really liked where this had ended up. Super low volume, and it just looked like very clear to me after this really nice breakout here. And then I got in early on this day, immediately got a 20% position, and then on this day at the end, because I had my stop too tight, got stopped out. Now over the next 2 days, or 3 days, it goes up a stupid amount. I think I would have almost doubled my account's performance for the year in like 1 day. And so this is where I'm like realizing how important it is to scale, because if you scale into something like this, you will just murder it.
But it's pretty incredible, right?
It really is. When you do that's a big thing I'm like looking at. I'm like, why have I not run the math for this? Like, what are you doing?
But again, if you don't sell below the 10-day moving average, you would still be in this.
Yeah, and who knows? It could go up from here. So even with a big pullback from 380 and now we're down to 243, it's kind of showing some strength here. Now I say that it could be down, to like $1.70 on Tuesday. So these names move.
To point
but,
this out,
sorry.
No, Dane, I think it's important because we reference Kulamagi and his rules, but if you just watch one of his streams, I guarantee you almost that he will say that he broke his own sell rules and sold too early, because he saw the position move up, and he regrets selling. But also, there's a reason that he does that, because he has probably experienced many times that he should have sold into strength instead of following the rules and taken off some profits,
Yeah, and think about it. On this day, let's say it got up to 380 and I was watching it that day, and it pulled back to 350 and I'm like, fuck it, I'm getting out. And I sold right there. If this comes down and then bounces back up and goes up another 30-40% from here, I'm still going to be okay mentally that I got out this day here. So I'm sure maybe you want to trim half. This is the kind of rule where I'm saying keeping it simple. Either sell in strength or sell at some point. Don't be wishy-washy with that. Just pick one or the other, and you'll be better off in terms of your odds.
This one had a miss on earnings ahead of the big move here, but then you saw the volume coming in and the move started, so I just assumed there's some promising guidance or something like that.
It's a biotech, so
okay, so maybe some news that doesn't show up here in TradingView. But what are your thoughts now? You said that you want to narrow down like the setups. How big role does our earnings beat on the last earnings? How big role is that for you now? Because I know Minervini and them, they talk about that all the time.
I think it's extremely important, because to be honest, there's two things that really move a stock. Right? And the two things are either something in terms of fundamentals or something in the narrative. It's extremely rare that something just goes up for no reason. Don't get me wrong. Sometimes momentum just catches a name where, like, I see it in names that aren't really high volume. And it's because what was the name at the end of the I can't remember what it was. There was one yesterday I was watching and it didn't have much volume, and I looked up how much it was up, and you know, I was like, wow, that would have been a tough one to catch. And it was funny because it was just bouncing around in the morning, and then just enough, it moved up just enough that it started to probably catch people's eye, and then heavy buying came in and it took right off. And that's just because there's no one selling. So sometimes you get those really, really random momentum plays, which have nothing to do with anything. It's just everyone's on it. But most of the time, I'd say probably 95% of the time, it has to do with either a narrative or earnings type scenario. And, you know, even with earnings, like you're saying, just because earnings come out and they're bad, or just because earnings come out and they're good, that doesn't mean it's going to take off right there and then. But now, as everyone starts to digest that information, you're going to start to see what the stock's going to do over the next like few days to a week or two. And you might see it take a little bit.
That's probably the best scenario if you see a decent earnings and the stock develops a setup, and then you see the volume comes in. It gives you just the time to get in from the bottom after a good earnings report, you know.
Yeah, and sometimes I've seen it before where earnings come out, and then you do have like the EPs where something just pops initially off of it.
Yeah,
and that's its own different kind of thing on an EP. You know, if you have a day where something really moves off earnings and you're going to try and get in on that day, just remember it's a busy day. It's going to be volatile. You probably have to have a smaller position definitely to start with a looser stop loss. You know, one way I've been thinking about doing this, and once again, I guess it's in terms of keeping it simple, it's just have very defined rules. So for instance, if I'm going to get in a name, like this is another one I wanted to get in that I was really, really bouncy. But NEUP was up quite a bit over the past few days, and I got up to a 10% position size, and I got stopped out at some point. So actually, let me go to a intraday. This is a 60-minute chart. I can't remember exactly when I got in on one of these here or something like this. And at this point, I probably had like my 10% position in and, you know, riding it sideways. And then at this point, I got stopped out on this candle somewhere in here. And don't get me wrong, it's for like a slight gain, so whatever. But my point being, it's just a tough one to hold all the way onto this, the actual real peak of this move. And that's just because the stop loss, you know, is tighter. And this is a name that was really moving pretty volatile. I mean, how much did this move? I mean, you know, I can't remember exactly what I got in at. It definitely wasn't, it was probably at like 9 something. But you know, moved up to 13 in 3 days.
Yeah.
So another one, and if you look at the previous chart here, don't get me wrong, this is not the world's prettiest chart, especially before it finally broke the 200-day moving average. But once it broke here, and I had this consolidation and sideways move here, this kind of, and then, you know, kind of had a cup and hand, or not cup and handle, what's it called? Head and shoulders. You know, right there. And then, you know, took off from here. So, I mean, this is, once again, this is the end of this day. This 12% gain it had here. This is really the more interesting day. And you know, one thing you look at here too, it ended the day, and the next day where it started, it took right off. You know, it didn't go way up and pull way back down, which means, you know, you're all over the place in terms of who's buying, who's selling, and who's pushing the stock in one direction or another. Just all things to think about, you know.
Yeah.
But I mean, if you zoom in on this, I mean, look at it 1 minute chart. I mean, this is all over the place. You know, you could literally buy this, set a stop loss, and on the very next move it stops you out because the spread on this is just, you know, crazy.
Yeah.
So
this has in my sheet here, it shows average dollar volume of 571K, which is pretty low compared to many stocks that you know.
Well, I mean, look at the market cap. Market cap's super low.
Yeah, I know.
Super low.
And yeah, I remember.
That's why I didn't. I was just saying. On this is the day, but you know, it probably didn't pop up on my radar because the market cap way back at $8 was probably below what I even look at.
Yeah.
So it is what it is on that. But you know, this is what I'm saying. So on certain names like this, I'm not going in with a big position. 5% is probably the max in terms of my starting, and I'm going to have a pretty loose stop loss. 8%, something like that. Sorry, I have to sneeze.
I've seen quite a few biotechs the past month in the screens, and I've also taken some of those. So it seems like biotechs and miners a bit lately.
Yeah, and I'm trying to think. Some of the other names I'm in. CPS is one I'm currently holding.
Yeah.
So I got
Maybe you
in,
can pull up ALDX then after that one.
Yeah. I believe I got in on the 21st. And it moved sideways on me for a while here. So I just finally have it now at a 10% position size. And I'm basically at break even on this.
Yeah.
But it's I go back and forth on how I feel about these things. And it just shows pretty steady volume here. I do picture it kind of bouncing around before it actually can take off again. Now, granted, this is obviously the real, this is the day you wanted to get in on this, August 12th. This is a long period of consolidation here before it finally pushes up here. And then once again, another breakout. You could have argued too, I probably should have got in on this 20th. I definitely was a day late getting in on this day. But once again, it didn't. I started with a 5% position on it, so it's on these setups that where I'm like, ugh, I'm like a day late or something like that. It also gives me an ability to get in on some of these names, because number one, if it's going to run for a long time, like if it's like NAG or something like that, it runs for a while. If I don't get in on the first day, it's okay on those names. Now, if it's this day I get in and it's like a perfect looking setup, I don't know how I didn't notice this. Or maybe, because it's only up 3%. I looked for up 4%, so it didn't pop up for me.
I filtered that down to, I know 4% is what stock B&M are using, but I filter just to get more stocks in. I filtered down to 3.5, I think, on the screen.
And I can play around with those numbers all day. And part of my issue though is I just don't have a ton of time to sit here. Like if I go to 3% and that adds another 30 charts to look at on average, like that's a lot of extra work for me, to go through. And don't get me wrong, that's the right way to do it if you have the time. I just don't have the time for that. So I try and keep it more generalized to bigger moves.
It's better to have focused lists then.
Yeah, it's just kind of it's just what it is what it is for me. But so this one, this is an example of something that I got in, and so far it's been holding up, and hopefully it can push a little bit past here. I'd love to see it get another breakout here. But once again, the nice thing is now I'm in this name, and the big thing is everyone talks about is it's house money essentially. Like I can't lose any money on this. My stop loss for the two positions is now at break even. No matter what happens here, it could come back. I don't lose anything essentially. I'm at what I'm at. Now I could lose what I've gained on it, which is not much, but it is what it is. If it goes back down, at least I didn't lose any money on this setup. And now it's up to a 10% position with a very small amount of risk. We're talking like a third of the portfolio or a third of a percent of the portfolio for the entire time. Because that's a big thing is, for instance, you could take a 20% position right off the rip, but where do you want to put your stop loss at on that? Because if you put your stop loss at 5%, that's like, what is that, 1% of your portfolio on one move? Sorry, I'm not that good at math.
Sorry, I was reading some stuff. What did he say?
Yeah, it's 1%. No, I was just saying, if you take a 20% position right off the rip on a name and you set your stop loss at 5%, you could lose 1% of your portfolio right away. Which you can't do that often. You know what I mean? Like that's, and then on top of that, you need to get decent sized returns just to offset that. So one way to offset that idea is I want to get to a 20% position, but since I don't want to go in at 20%, maybe I'll go in at 10. And I can keep my stop loss then at 7%, 8%, and You can do trailing stops. So most of the time, it's not that full 7-8%. And that way, if it has strength, you'll go right into it. I've been thinking, for instance, maybe doing a trailing stop. And then if I buy a name, let's say it goes down like 3% right off after I buy it, maybe you just sell out right there. And then that way, I don't have to worry about it going all the way down to 7 or 8%. But if it starts going right up, that trailing stop loss will move up with it, and then I'm kind of set. I'm good until it gets to like another percentage I want to buy more at or something like that.
Yeah.
So a lot of ways to kind of play around with it to get the numbers to work in your favor. If you do the math, you can figure it out. And this is how you can outperform pretty well. On top of that, what was it? ALDX? Is that what you said?
ALDX is one that I am in already. It's a biotech, so a bit unusual for me. But I took it on 19th of August, and I sold half of the position on 21st of August. So and raised the stop to break even. So it's pretty risk-free here. But this seems to just go up on not a lot of volume. And it has a couple of good earnings behind it, but still it's a biotech. But right now, on Thursday, it was going up a little bit and then pulled back. So, but at the same time on Friday, it came back up from the 10-day moving average, and it's pretty tight, the candles. So, but there are some overhead resistance if you just go back to, March.
Right.
After having a big drop.
Yeah, anybody who held through that.
Yeah, that would be a murder. But there came in a lot of buying after all.
Yeah, and I mean, to be honest though, the range even for the longer term charts, right where we're at that long term resistance. This very few people were actually probably involved right way up here.
Yeah.
So it's actually a pretty solid line of support and resistance right in here.
Yeah.
I would argue that this is the support line there.
Yeah. Maybe you can say that it's setting up a little bit again right now, but let's see where this one goes.
What's the ADR for this?
461.
Gotcha. That's average daily range. If anyone's like not following what that means, and all that means is on if you look at so many past days, what the range of the stock move is price wise.
Yeah, and I'm using the average of the last 20 days, by the way, on that calculation.
Yeah, sorry, and we've been doing this for so long now that like I'm making a ton of assumptions that people watching this know what I'm talking about. So if you guys don't know what we're talking about, you can ask questions or anything like that. We'll happily answer. Join the Discord because that's where we can go more in depth detail and keep talking to you.
Yeah.
But other than that,
and essentially people use ADR percentage and ATR, which gives you a number. And I don't even remember, Dane, but one of them excludes like, what is it? One of them, I don't even remember the one exclude like gaps or something like that, right?
yeah, I can't remember if it's, it all depends how you set it up. Like you can exclude highs, you can exclude, and just do actual day range, like closings, essentially like open and close you can use, or you can use low and high if you want. So it just depends on how loose you want to set it. And it's, it just kind of gives you like some basic information about how the stock's, been performing and moving, so you can make more informed decisions. One thing that Johnny and I talk about a lot is using percentages of things, but a pretty sound strategy is to use ADR, ATR in terms of like your price movements. Because, for instance, like if we go to the intraday chart here, sure, I could say, hey, I'm going to put a stop loss at 5% on this or something like that. But I could also look and say like, okay, this is the 65 EMA line, this green line here. And it touches this every time. So maybe I'll go like, I don't know, like 2% below that or something. You know what I mean? And that's where I'll put my stop loss. Or I know that, on any given day, my ATR right now is 9 cents. So maybe I'll say it's 9 cents from some point. You know what I mean? And that's how I'll manage my risk is with that number. All of it are legit ways to do it. At the top, I've seen people argue they do one or the other.
Yeah.
So
And I also use it to time the entry, because I don't I right now I'm using the low of day as the stop. So I don't want it to be like Kulamagi does. It's based on him. I don't want it to be higher than, you know, 1 ATR from the low of day. Basically, so if it's higher than that, I will just wait and see. So you can use it for many things, you know.
yeah, no, and all of them are legit ways to do it. And I think the more you do it, the more you use each one, you'll probably find which one you think works.
Yeah.
I don't always have access to like in-depth charting like this sometimes, so I use a lot of percentage type things. But I guarantee you, if like I said, if I was sitting here full time, I would be looking at all of it. You know, I don't have ADR on mine like if you use TradingView like Johnny does. So that's an advantage that Stock Charts doesn't have. So Stock Charts, if you want, you know, you can just add that in for me. That'd be great.
Add it. Go on.
You know, you could just set it up. Just let me know when it's set up. I'll be happy to use it. But ATR is pretty good. I like ATR. I'm used to seeing it now. And on top of that too, I use all my moving averages, that kind of thing. And this is all trading stuff. You know, if you're using the value style of things, you gotta I guess use multiples or something. I see the thing with value is, especially nowadays, value's gotten so skewed. Like the PE doesn't matter. No one gives a shit if it has earnings or not. Like just all the things that matter, like those matter when shit hits the fan. Then all of a sudden everyone cares. But I don't know, for the past 20 years, no one's given a shit. You know, since the 2008 housing bubble, no one seems to care. No one cares about any of these numbers anymore, it seems like. So I'm not saying it's not the right way to go about it. And trust me, if we ever went back into that style, I'd be happy to play things that way and look at historical multiples and use that kind of idea to judge where something should be valued. But in the meantime, the technicals do just as good a job, and I can look at this and figure it out in, you know, seconds, as opposed to doing hours of research to figure out where I think something should land. So it just is what it is. Yeah, well, GAUs. So this is another one that I'm in right now. I did not catch this giant move, I believe. Me being ballsy, I liked the way this day ended, and I took it on the end of this day here. So somewhere around like $1.94-ish or something like that. Now I know people argue against doing this. I'm okay with taking something at the end of the day. It's not. It just depends on the setup. If it looks right to me, which this had really strong volume on its way up, broke out on this day, and ended the day really strong. Those are things I'm looking at if I'm going to go into end of day. And you know, held up the next day, didn't hit a stop loss or anything like that, and it's been slowly working its way up. So it's not like I'm up a ton on this name or anything here, but this is one of the ones that now I'm looking for signals that it's going to break down. And I almost sold out here, but these tight candles and this little bit of a volume drop here kept me in it, and just sold out in the fact that, you know, it's taken some time, and I can put my cash to use elsewhere. But then on Friday had a decent day where it held up. It, you know, it's only up 2.5% or 2.3 if you want to be specific, but it had pretty good volume here. So I'm just holding this one to see if I can catch that next move up, and we'll see. This is one thing I think about is this is coming off the 200-day moving average. It had broken out from this range finally for the first time. And if you zoom out and you look at longer term charts that have broken out from here, this is where you tend to see that biggest move is off that 200-day moving average. It's usually harder to catch these ones because you can see how many times it's failed. Broke out, failed, broke out, failed, broke out, failed, broke out, failed here. Like tons of times. So catching this first one is very difficult to do until you have this really clear signal that something's coming, you know, that it's really breaking out of that base. But if you go back to a name like, I think CGTX, like you can see, you know, it broke out finally from that long 200-day moving average. And then this is where you'd honestly want to catch it, is somewhere in here. Like I said, it was probably too small. Oh no, this wasn't too small. This was just, should have caught this one. I didn't catch this one. But on this move up is where you can get that next really big move. And you
Price
can
was
watch it
below
kind of,
$1 though.
sorry.
Price was below $1. Maybe that's why.
Yeah, but at the end of this day, August 12th, I would have argued you could have bought this.
Okay.
Only because there's some resistance here. But my point being is I'm okay with buying something at the end of the day if it just shows that it's pushed higher all day.
Yeah.
And even on this day, the next few days, you know, it's bouncy in here. Don't get me wrong, and you can get stopped out on this, so it's not easy to do. I'm not saying that. And you obviously missed this big move here, which was a 28% move. So also really tough. I'll be really hesitant at the end of the day to get in something up 28%. Not saying it doesn't work, because I've seen it work many times, but it's just tough because the next day it could end up down 28% very easily. But the whole setup looks okay to me. Not great, but it looks okay. But my point being is, when you come off that first 200 day and then you're getting into these move ups, like if you look at one that's been moving up for like a long time, I'm just trying to think of a name that's been a little bit slower of a mover from the 200 moving day. I don't know. What's GROY been doing? Is this... Well, GROY's just ran it for a while. But once again, this is... You could argue somewhere in one of these it's broken off the 200, and then this is where you see that long run up. I'm trying to find one that's a bit further into multiple moves. Can you think of any tickers that have more of the stair step? I don't know. I'm drawing blanks here.
Maybe one of the big ones, Carvana or something.
Oops. What's Carvana's ticker?
CVNA, but not really. Well, maybe if you go back a bit.
Yeah, I was gonna say I gotta zoom out on this. We can maybe do a weekly chart. Yeah, so on the weekly chart, you can see it has the bigger stair step, I mean, this is the 200-day moving average, so this isn't perfectly making, but Carvana also flew up before and came back down. So you could probably argue that you'd more want to use like the 100-day moving average to make my point here, especially on a weekly chart. It moves up and moves up like a bunch of times, and then you notice that the moves become more gradual sideways. It does have breakouts that occur now, but they're just much smaller because it's much easier to go from, I don't know what the market cap was here, but let's say it's like 2 billion to 5 billion to 10 billion, up to 20 billion. And now when you're up in here, it's so much cash has to flow into these things that stair step just slowly becomes more gradual as you get further and further along. So if you're looking at names and you're closer to those initial few breakouts, now a lot of like Minervini and those guys say, usually William O'Neill was a big fan of this, saying that you'll usually see around 4 to 5 breakouts until it hits its peak. That's really typical for a stock. And then around 5, you should be really nervous if you're going in on a 5th breakout.
And by the way, on TradingView, you can find a free script that shows like the Minervini's stages, and just like it shows you like a text and some information if the stock is actually in the second stage where he tends to take the trades. So it's just like there's a lot of opportunities if you just want to have some indicators that show you directly. I mean, it's pretty easy to spot with your eye, right? But if you're new to this,
right? And I don't know. There's just so many things that go into it now, and I keep feeling like I'm seeing it more and more. So I'm at least confident that I'm improving. But now the numbers just got to improve. I just got to keep getting better in the numbers. And I know my biggest issue now is going to be, I feel like I can call the setups decently and I can get into the names and scale into them. It's just not getting stopped out too often. It's keeping that loose enough. Which is also why Minervini says the most important thing to do is know your gain, because once you know the percent that you gain, it can help you determine what your hit. Well, not determine your hit rate, but then you can pay attention to what your hit rate is and start determining how much you're willing to risk. Because let's say you want to get 100% return, you return on average like a winner 10%. Well, now I know what I can set my stop loss is based on my hit rate, because that way I can determine how much I'm going to lose per trade, how much I'm going to make per trade. And if you do that, let's say over 100 and 200 trades in the year, you know what your return will be.
Yeah.
So mathematically, you can figure that out pretty easy. But yeah, other than that, that's really what I've been kind of thinking through and working on this week, or past 2 weeks, I guess.
I think I have a new, a new section to the channel, Dane. If you pull up UUUU,
Oh God.
we're gonna have a new section called "Where do you think Redneck Johnny bought?"
That's
And
fun.
in this case, drum roll, 18th of August is where I bought UUUU for the third time. I think I tried this now.
Brutal.
Very happy. On third time, I ended the day up. And what happens the next day? It's completely destroyed, down to $8 almost. And then what happens the days after,
Yeah.
This one is very annoying to me. You have one in UAMI, right? This is my nemesis, I think, with the swing trading.
Yeah, I just UAMI's one I just could never get into. So it is what it is. Sometimes it's just not gonna work for you. So I give
Yeah.
up.
I didn't have a big loss or something. It's just like I tried. I think I even maybe tried 4 times in this name, and it just never worked. And of course, when I gave up, it continued to go up.
Yeah, I will
But
say one thing I've thought about is because like UAMI, for instance, I in my head I was thinking, okay, it's my third time trying it, which means I'm down. I think at the time I was using a 3% stop loss, so that's
yeah,
3. It's almost a full percent now of my portfolio I've lost on UAMI. So then I was thinking, if I get in this, I have to have it return at least
yeah,
9% just to break even. But at the same
yeah,
time, now I'm looking back and thinking, yes, it's 9% just to get back to break even. But if I did, I get my 9% back that I had lost.
yeah.
So I guess looking back, I shouldn't think of it like that. You can go
Still,
into the name that many times because
yeah,
if you do get anything back on it, it's still money back in your pocket. It's even though
yeah.
it's not necessarily like a true gain, it's a return of capital on a good setup. So
Yeah.
I have actually
Just
corrected that rule in my head.
it just gets a little bit psychologically
Oh yeah,
harder to enter again. And I saw also I had like other good traders that I respect. They were in it because I checked after I bought, and I saw some other people. They were like, "Oh yeah, this looks really good," and then the next stage is I think it fell 16%,
yeah. This is a shakeout.
20%.
This is a
Yeah,
shakeout day.
yeah, yeah.
Um,
So that was, and if you go back a little bit on the channel, you will see we did almost an entire stream, I think, on this ticker, because there are some fundamental numbers that are a bit promising in UUUU.
right.
So maybe that's about to materialize now.
Yeah. Well, it is what it is on some of these.
Yeah. And I keep like I was gonna say it earlier when we talked about testing things and stuff like that, and how everyone does it different. Because you can read all the books and watch all the videos and all that stuff, and at the end of the day, all these people they tend to lose more than they win, during a year. So even if they test and they are experts at things, most of the trades they end up getting stopped out, which is a bit like, because with so many different strategies, that's the end result for everyone.
Right.
So it's just like you can test things and it still will be like you're gonna end up seeing things that looks very promising and it just turns on you and it doesn't work out.
Yeah, and there's not much you can do. It is
No,
that's part of knowing that there's a lot of odds involved in this, and just
yeah,
working on improving those in every way you can.
Yeah, and there are a number of ways to do that. I guess that was my point. Like even the best ones have tested and looked through probably hundred thousands of charts. You know, they still have a hit rate of below 50%.
Right. Well, I think I think I can call it here. You got anything else you wanted to add?
No, I got stopped on heaps. Maybe if you have time, then if you pull up OSS.
Oh, I actually liked OSS for a second.
Yeah, I did too, but I didn't lose on it. It was a break even because I got stopped on yesterday on Friday. But if you look at the volume, and that's after a good, pretty. It's not a good report, but it was a beat. You see, especially on Wednesday, a lot of volume came in for this ticker, but it didn't move the price a lot. And then it kept going, right? Well, maybe once again, Minervini style, you would have taken this on Monday, 25 of August, right? In that W when it breaks that kind of pattern.
Yeah, so one of
and
these
you
2
would,
days you could have taken. Yeah, I think the 25th here you could argue. And then I will
yeah,
say, if you're following what Minervini says, is you're watching this volume, you have this huge volume day here, but on this big volume day, you don't have that much of a movement. That's actually a sign of
no,
weakness. The
yeah,
following
I
day,
was
you have the
gonna,
same thing, and the volume contracts quite a bit.
yeah,
This would be a signal, I think, in his mind to sell.
yeah. Because
So,
that was kind of my point. Like it didn't move a lot, and that was the most volume it has gotten in a very long period.
and like,
And if you zoom out a little bit, it's already up a lot, you know, this name. So maybe, but still, it didn't break the 10-day moving average or anything like that. But I just when I took this name, because I took it the day after, I took it on 26th of August, and I just saw the volume coming in, or maybe even I took it at the end. I don't remember. It was 25th or 26th.
gotcha.
And the volume just came in, you know, and I felt a little bit annoyed yesterday when I got stopped out because I thought this could also move, but I was a bit worried when it didn't move so much price wise on that on Wednesday.
Gotcha. And then, what a beautiful cup and handle here, first off.
Yeah.
Like,
Oh
this
yeah,
is
there,
fucking so textbook. And then,
July.
one thing I'll say too is, like, to the same degree, and this is one thing I talked about, not necessarily selling based on certain numbers, but more looking at what the stock's doing. So, for instance, you got this breakout here on a perfect cup and handle. You get in on this day on the 11th, okay?
Yeah.
If you rode this for the few days and you were able to stay in because there was a bit of a shakeout on this day, but if you rode this up, now if you're following the volume looks really good. And unlike this time where the volume on this day was low, the volume on this day on the 17th matched it, which would have let you probably stay in. You probably would have been possibly convinced to stay in, even though I will say this pullback from the very peak there, that should also be kind of a warning signal. But then on this day,
Yeah.
you have the down day here, which, it is a bit of a correction, but it's just one down day. But that volume really contracts. I would argue that if you didn't get out on this day, you better be out on this day.
Yeah.
Because that's the signal that it's moving down. So those are all kinds of things that you should be focusing on in terms of knowing how to catch the entire move and getting most of it, because, for instance, if this day was a really tight candle and this volume was super low, or kind of actually, I guess it would be super low. If the volume was super low here, that would be a signal actually to stay in. And that's why I say, like, that's kind of understanding the technicals a little bit better. And it's not nothing's perfect. It's never going to be perfect. But just those are things that, like, as you start to read more of the nuance of these things, hopefully you can start to pick those things out. I'm trying to work on that because it's not something I'm great at yet by any means.
Yeah.
And it takes a lot of reflection. Like, when I look at this chart and I look back, I'm like, all right, how would you have played this one? What would you have done? And what made sense on that play? So then hopefully the next time, if you do catch something like this on a stock that looks like a somewhat similar setup, it gives you a little bit of foresight into how it should perform and what would be basically red flags that it's not performing like you want it to.
Yeah.
This is the market telling you that this buying pressure is over.
Yeah, so a bit annoying to see, but maybe this is the point where this will fall a bit like the stage 4. But let's see.
Yeah. This one tends to have pretty good cup and handles. I will say this is a good head and shoulders right there. So who knows? It could, if this pulls back up to a little bit and considers this like a giant cup, if this rises back up, this could take off again. So who knows?
Yeah, it's one to
it's just tough
because
to predict.
there are some good volume since beginning of June coming in, buying volume.
Yeah, and I mean, it's a pretty small market cap too. And one thing you have to think about too in terms of market cap is there's two backwards pressures on these things. Number one is passive indexing. As this rises, passive indexing keeps pushing more and more money into these things. It's just how it works. And also, once it gets to a certain size, it opens it up for bigger institutions to take a position if they want.
Yeah.
You know, some institutions, let's say they have their market cap at 200 million. Well, you know, for most people are like, oh my God, this is already up to 200 million now. I'm going to start to, I think it's ran too much. Well, that just might mean institutions are just starting to look at this.
Yeah.
So
that happens all the time. That's also when we did deep value. One of the points you were looking at, like, this has grown now to become more visible on radars around in the investment world.
Right, because you know, as always, if you're investing, $200 million, you're not looking at companies that are so small, because if you want to put 1% or something into these, you have to make sure you're not buying 5 or 10% of the company. Unless you really want to.
And once again, if you look at this now on 20 of August, it just touches the 50-day and bounces back up.
Correct. Great
and
signal,
that tells
actually.
you,
that's a good point.
Yeah, that tells you that someone is watching this.
Right. There is.
And
you're really right. That is a true institutional sign that someone is buying. They do not want it to collapse from that point.
Yeah, and also if you look at the volume after, you can. This was my thinking, that people, some institutions started to buy there and have been it ever since.
Yeah, and to be honest, if you look, I mean, it's not perfect, but you get like a, I don't know, 6-7 day period kind of in here. This one's a little choppier as it first pulls up. You get the same thing kind of in here, and then you get a very similar one in here where this day.
Yeah.
I would argue that the heavy volume on here makes me think that someone's getting out too, possibly.
Yeah. Okay.
And the reason I say that is because we're hitting a new high, which makes me think too. Also, though, it could be it could be that there's heavy volume here on this day, and these guys are bag holding, and on this day you saw a lot of those bag holders finally get out.
Yeah. No, I was struggling a bit to think because I also noticed those patterns that you saw, like on the last move, we had all those days with volume and the move went, and you can argue the move started then, the last move now started on 20 of August, and it's already a bit late to go in where I came in, right? Mm-hmm. But at the same time, that day on Wednesday, confused me a little bit, because I watched it and I saw a lot of volume coming in, and the price, like you see with the wicks, it went up to 661 or something like that, and it stayed there for a little bit, before it started to drop back down again.
Yeah.
So if you just go back to that Wednesday, it looks really good.
Right. So,
but then it turned around.
We'll see. You said you got stopped out on this?
Yeah, at the break even though, so not a loss.
Yeah, and that's another thing too I've been thinking about is even though you got stopped out at the break even point there, if you were to hop into this again, it's not just a brand new trade. And it doesn't really matter what happened on the first one. You played it how you did, and you didn't lose any money, which, as long as there wasn't like something else you didn't buy because of this one, that's the only time it would be like a real negative, is you're like, oh, I should have took that other stock. But other than that, if you had cash that was doing other things and you weren't worried about those, and then this one just become a broke even, Now, yeah, you could argue, I guess, in hindsight, maybe next time, play it for the gain, but you didn't lose anything. So every one of those is an opportunity to make money.
Yeah. And this one has a ADR of almost 8, so yeah, it has showed that it has some moves in it,
Yeah, I mean this run up from even what is that, May? I mean, this is crazy.
Yeah, couple of bucks. So now let's see. I was pretty excited about this, but I'm not in it anymore.
Well, it's just a name to keep an eye on. We'll see.
Yeah, yeah.
What did this do after hour? Anything?
No. No, it got slightly down maybe, but nothing big.
Gotcha. Well, it could be also too like I'm in my mind I was already thinking like this is a perfect head and shoulders pattern, and if you look at this as more of a big cup and handle, it could be here, pull back, and then if it gets the handle right here,
Yeah.
so maybe needs another week or so. But I agree with you in terms of the fact that there's someone buying here on that 50-day.
Yeah.
All right, guys. Well, I hope that was helpful. I feel like it's good to talk these things out.
Yeah, and I think since we didn't do the previous weekend, we had a little bit to say this time, but yeah, the markets are a little bit like you get a bit excited and you end up break even at the end of the week, right? It's a bit mixed out there right now.
We had a bit of a pullback here, and then we had this awesome day on the 22nd. And then things kind of moved up, and then Friday, just bit of a sell-off. I know September historically is a very slow month usually, so I'll be hesitant as we go into it. Who knows? Could be a great September. That doesn't mean anything really, but historically it is a slow month in the markets. I think people are probably busy. Everyone's back to work, or school's back. Everyone's in college. So I wonder, and the euphoria of summer is over.
Yeah.
So
maybe
I'm sure it's psychological in that idea.
But remember, last October it was Chinese stocks and quantum computing. So October till December, we will see.
Yeah, and historically, October through December is one of the strongest periods in the market. So, and if you look at last year, look at September, perfect little drop. Kind of recovers, and then from October all the way to, the New Year is where it finally started to bounce around here. So actually, it follows the standard chart very, very well.
Yeah.
At least historically. All right, everybody. Well, enjoy the rest of your weekend. If you're in the States, have a nice holiday weekend. It's Labor Day on Monday, so markets are closed. So things will resume back on Tuesday.
Nice. Good luck to everyone for the coming week, and we will try to be on next weekend again, right, Dane? Or are you busy or something? Or
to be honest, I'm trying to think. I don't think I have anything going on next weekend, which is a miracle. But we'll see. I say that something will come up.
As always, we will keep you posted in the Discord server. So jump into there. It's been a bit quiet. Also a bit. I've taken a little bit of a step back from posting things. That it's not because I don't want to. It's because I have found other resources online instead of my sheets. So it's just been a little bit slower for me personally. But we try to keep it alive. I know Dane, you have been very good to post your market strength sheet. So
yeah, which by the way I hadn't pulled up. So if you're curious, but I mean, just if you look at the numbers, I mean, it was a strong week. I mean, we had some slow days here at the end, and the one thing that held up on Friday was just the breakouts had been okay, and there was only a very few failed breakouts towards the end of the week. So the numbers kind of held up here at the end, but definitely a tough day on Friday, no matter what. And when I say failed breakouts, it doesn't mean from the previous few days. It means like on that day there was very few. But the reason why I saw there was very few failed breakouts on Friday was actually because there's very few actually decent setups. Like
Yeah.
there was very few things that moved enough to even become
Very
interesting and
few.
take a position in. They all just kind of slowed down and pulled back. So
Yeah.
so you have to think this number is a little biased because when I'm looking at this failed breakouts, it's things that would have looked good to me that if I had taken, I would have gotten beat on.
Yeah.
Because that's more how I care about it. I don't really care if you know, something's been running up for forever and it just has a bad day. Like that's not a setup I would have taken anyway. So I don't count those. It's only the ones that really look like they were about to break out and just didn't follow through.
Yeah.
But yeah, all right, guys. Everybody, enjoy your holiday and everything. I will see everybody next week. Johnny, have a good one.
Yeah. See ya. Bye.